Hey, everybody. So, as always, this is for informational, educational purposes only, not financial advice. Another interesting day, I got to say, my Microsoft, I dumped a whole bunch yesterday at the highs, really, really close to those highs, and added some shorts. I just think it's not the mag that's in the right place right now. In this more kind of almost binary reality for investors, they really feel like some things are either going to figure it out or not. It's not that it's a bad company. It's not that it doesn't have incredible assets. It's that it's in the doghouse right now. So we're also, I mean, as options traders, we always have to think of, what's the durability? So that's why I use some of the risk measures that I use in Turbo Trader Pro. We have all these incredible measures that we use. Part of that is to really think of durability, right? I want to get into either an income trade or even a leverage trade when there's durability to that. So in a leverage trade, I want durability of movement. In an income trade, I want a durability of a lack of movement, or perhaps option prices are very, very high. And I think there's going to be a durability in the drop in option pricing. There are a number of different ways you can look at it, but I want to see some sort of evidence that things are going to go on for a little bit, maybe a couple of weeks, or it could even be a larger secular trend, right? If I'm buying leaps or something, I want this to be an incredible trend, right? This Micron, I called it out at 160. It got as low as 70. I didn't pick the bottom, but I said this is absolutely critical, and it tripled. So, that doesn't always happen, but this is a durable place that you can kind of play those pullbacks to some extent, barring some sort of wider sell-off. So today, what's interesting is there's more software. I called this out in a video a few days ago. I said software is probably still in a little bit of trouble. We see Adobe continuing down. Notice how it didn't bounce. In yesterday's video, I said, this thing is a pathetic bounce that we're seeing right now in Adobe, in starting to get hit as well again. These are new lows, right? So everyone's kind of trying to pick the bottom in IGV in the software sector. And I'm out there saying, this isn't over, right? You have to understand the durability of what's happening out there with agentic AI. It's very, very concerning. Now, I think there's some areas where you can kind of get into where I think, we saw some great numbers out of a Datadog, Snow. Does it matter? If things get ugly, it doesn't matter. They're going to take things down because there's a liquidity event, because they have to sell things that are even working. They're going to sell good stories to pay for things gone wrong, right? So that's always a possibility. So you have to be very careful. If things turn into a rout, a real liquidity type event, then really that's where some of the hedges, and I've been giving hedges to the members lately, where you kind of go, okay, overall, this is going to turn into a highly correlated sell-off, and where a lot of things are going to sell off. Maybe not consumer staples. The money comes out, it rotates, right? So it doesn't just generally rotate into cash, although it does sometimes, but it rotates into other sort of safer places like staples, which have done really, really well anyway. They're almost like a new. Remember when utilities were no longer safety, they were AI because it was about, power needs for AI. Staples are not, they're a bit more safety, but they're also kind of a little of a play to the real world that's been doing very, very well. So it kind of almost a little bit of a re-rating there in a sense. I like Apple, right? I put out the video, it pulled back a little bit. I kept adding, and actually that was a great opportunity. Anybody who watched the video got, probably a really great price. And now we're starting to push up again. So in my mind, the challenge with Apple is that it's on the technology side of things, right? So there's a general move away from technology right now and into everything else, right? The industrials, the physicals, the materials, the real world stuff. So, and I say that a little bit facetiously, like it's all real world, but real touch feel things, right? Stuff you can drop on your toes, stuff that's going to happen no matter what as the world retiles for AI. So that kind of stuff has caught for all the reasons I've been talking about for 2 months. I hope you guys have been watching my videos. I've been talking about this for a very long time. But Apple, I have to say, because of their physical/AI exposure, is interesting to me, right? They haven't spent like crazy. They're in the right place at the right time. The AI is coming to them, which is they've got an incredible series of products, as well as these sort of desktop Mac studios, et cetera, that are going to do well because people are sort of they're buying them because of this, local model usage. And that's not everybody, right? Most people are going to still use cloud. So, but that's going to be a little bit of a tailwind they didn't expect. And so it's not a cheap stock, but it's increasingly having these positive positive storylines. And as they pull out of Microsoft, clearly is in the doghouse. Meta, I don't think is much better at this point. Amazon should be doing better. I'm a little bit confused there. I like it. I think it has the right things. And Google, I think, is generally very good, but with Claude getting so good, right? Opus 4.6, I mean, the Claude is going to really steal some of their fire at this point, which is maybe going to make things a little tough for Google right now. I think it will ramp up into earnings at some point, but you can kind of see how basically Apple is taking the baton. We've seen a lot of that actually, before 6 months ago and in the previous year and a half, it was all mags sort of generally did well. Maybe not Tesla, but generally AI lifted all boats. Now it's been kind of different leaders, right? We kind of had Google was the big leader by far. Now Google's kind of chilling out a little bit and Apple's sort of taking the lead. NVIDIA actually as well, right? Because the physical build out of the world of AI, of inference, is more and more including NVIDIA because Jensen's very, very smart. So he's moving more into that area to capture that inference phase of AI. So very, very good moves there. And so I think the AVGOs, the NVIDIAs, I think they're going to be important too. The only caveat to all that is even great stories, if it's in that tech realm and there's big selling going on in tech, right? So if the world is just starting to decide that they're selling tech, then it can create a little bit of an issue. So that's why we put on an income trade in Microsoft yesterday, right near the highs, almost at the very highs. In TurboTrader Pro, the scanner program, I actually added a downside short position as well, that's some long put spreads. And I'll probably add that on any little rallies in here with kind of a stop maybe around 430, 435. I'll probably stop out a little bit. But I think the market just kind of has this sort of squishiness to it right now. So anyway, I hope that kind of helps you guys. We can see the Lumentum, some of those names, tech names that I've liked a little bit more are acting okay. Some of the names I've liked over time, like Upwork, for example, just getting dismantled. And I don't think you can touch it at this point. I think, I kind of thought that they would move into adopting freelancers to kind of get stuff done on the AI side of things. And the market is just not recognizing that. So it is what it is. You can see anything sort of software, social media related. Look at Reddit. I called this out on one of my shows around 217 and it's dropped like $80 since. I did not short it. I'm not that smart, but I said I just don't like it. So at least it kept me from getting involved. So here we are, an incredibly interesting market, a lot of dispersion going on